stock market rally have some investors looking to bonds? I want to bring in my guest contributor for the hour, Aadil Zaman, who is the partner at Wall Street Alliance Group. Great to have you here with us in studio.
Good to be with you.
So let's just set the scene here for what is transpiring here today and the demand for the auctions that have already happened over the course of this week. You had what essentially went well for a solid 3-year and 10-year auction earlier this week. What does that set up perhaps for the longer duration 30-year that we're awaiting later on this afternoon?
I think investors will gravitate towards bonds because there's a lot of uncertainty still. Our outlook has always been that first half of the year, the market's going to pull back. Second half of the year, the market goes up. But there's going to be uncertainty. You're hearing about this tariff issues, uncertainty regarding the deficit. All of that is creating volatility in the market, and the safe haven play, investors gravitating towards bonds, gravitating towards gold, we are going to start to see a lot of that.
And so with that in mind, the appetite that we're seeing for bonds versus equities, how are you seeing that kind of transpire and play out in the investor's mindset right now versus a normalized period when we didn't have Fed policy being more imminent and us waiting for them to start cutting, plus the additive of tariff policy that has really rocked the markets this year?
Yeah, I think it's like an insurance in the portfolio. And we've been talking to clients about making sure that the breadth in their portfolios are wide. You know, one of the issues we constantly see is people become concentrated in certain sectors. So having your bond exposure, keeping the portfolio broad, having some gold exposure in the portfolio actually protects you on those downsides. So we are advocating for clients to increase that exposure so that they can, that gives them the option to pivot and be more aggressive when the opportunity is there.
Earlier this week, I was taking a look at a note from UBS that made its way into my inbox saying that they believe the Fed and or the Trump administration would likely make adjustments in the event of much higher yields. In their view, this means high-grade and investment-grade bonds represent good value at current levels for investors seeking portfolio income here. Just want to get your reaction to that way of thinking that some investors may be deploying right now.
Yeah, I think that, I think right now where the situation is as far as the market is concerned, there is certainly an appetite for bonds because, again, there's so much volatility related to this. And I think when it comes to the budget deficit issues, that's driving a big concern because investors feel that that could potentially have macro consequences, could potentially weaken the dollar as well. So because of that, we are seeing some appetite for these safe havens.
If we may, let's flip over to some of the sectors that you like right now in the equities landscape. Where are you looking to at this juncture?
Yeah, so what we are advocating is that keep the portfolio broad. And being broad means that having some exposure to utilities, for example, because artificial intelligence is going to grow, demand for electricity is going to go up. Because of Trump's deregulation, financials should do well. Consumer staples in a volatile environment are considered to be safe havens. So we want to keep broad as far as the equity exposure is concerned. And then what we also want to do is that we want to have gold in the portfolio as a hedge. Gold has been a tremendous hedge in our clients' portfolios this year. It's up more than 25%. And what we are seeing is that as the dollar is becoming weaker, international markets are appreciating from a relative point of view as well. And those have tremendously underperformed the US market since the financial crisis. So these are some of the areas that we are adding exposure to for our clients.